True to Gary's roadmap of 2023, the market rallied last week with only a mild, albeit fast, pullback of less than 4%. Today we look ahead for an understanding of what to expect in the next few weeks and where to focus on the trading shares. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
Was quite surprised at how fast the market came back down and then turned around and rallied. And it was kind of hard when you were saying we were expecting mild pullbacks for the second half of 2023, that it was actually only about 4%. Were you surprised with how the market moved in that quick down, quick up?
Look, originally I was looking for that market to sort of come back to 69.50, the hour index. But when I looked, must have been over the weekend or Monday there, I looked at that trend line from the 20 low, and that went through the October low, and I thought, oh, this is kind of reminded me of the Shanghai there, basically going back a few years, where sort of like this long-term trend line, sometimes they come back and retest that and they take off from there. I remember the Shanghai just hit that line and then just took off. It actually really, really aggressive bounce there. And having that sort of 12-week coil there, I say, it kind of reminded me of that 2017 period that we had 20 to 22 weeks in that 150-point band we sort of spoke about last week. So I just kind of got, you sort of, markets in the past sort of, seeing the same things over again. It's like, oh, those two things there, they really sort of cause a market to bounce really aggressively. So when you see a market coil and tighten up over a long period of time in a corrected manner, they just gaps out, and then hitting a really key, long-term trend line as well, and just, kick up as well here. So the thing I found interesting was that 2017 move was that once it actually reversed that 20-week coil, that within 4 weeks, it had gone to a new high. So they just sort of told me, wow, this could be a really powerful bounce here. So, so I definitely haven't written any calls on any stocks. Just try to get long a few good quality stocks, a few names here. The market's up pretty strongly here. So, wish I was a little bit longer, but that's okay. It's all about, we're going to be just buying stuff for the sake of it. Obviously, some stocks are going to go up here, so you just got to be in the right ones here. But pretty powerful move here on ARNX, and I think there's every chance here, Chris. This, it's not going to surprise me if we hit the index at the new high in 4 weeks. So just based on what's happened in the past here, so it can be quite powerful. So the US market's sort of probably a bit more of they're a little different there. I think they're tracking higher there. Look, all our research, that I've done here on the third years and pre-election years sort of suggests that, we're unlikely to get big pullbacks in the second half of this year. So, looking at maybe 2 to 5% pullbacks maximum. So there hasn't actually been a larger pullback than 5% in the last 60 years of this cycle here. So that sort of, is quite sort of somber there. And there's still definitely been, everyone's been pretty, still been plenty of bears here sort of from all the way from October, even through the March low as well. We're shaking quite a few of them out here now. So the bears are getting fewer and fewer, but there's still a few, sort of strong bears out there. So, we'll just, just sort of stick with what's going on here. So I think it'll be a bit choppy. We're in that sort of July, August can be the choppy sort of period. It's oftentimes when you do get a bit of a pullback there, but still think the same, Chris. I still think any pullbacks are going to be mild here. So, although the S&P and the NASDAQ are definitely sort of hitting some resistance points here, I think they'll probably just retreat back here. And just, so far we've just seen those two small inside weeks, so there's not much pullback in there. So not, no real selling volume in there, just a bit of consolidation there. So just reminds me of, just similar to sort of past markets there when they get going here, they just tend to, they'll have a little bit of a pause or consolidation after they've had an aggressive move here. So, but again, I don't expect anything too negative here, really. Yeah.
So that's the NASDAQ, and then the S&P is probably in a similar boat. I'm just noticing that trend line that we've got, sort of channel where it's bounced off the bottom of the channel, and also bounced off the top of the channel twice. We're edging towards that. So would you fitting in with what you were just saying about the indices, would you kind of expect that to maybe travel sideways or mildly down and then maybe kick up again?
Yeah, no, exactly. I think I'll hug it because look, we could break through it and keep going, Chris, but I think it's more likely we'll probably hug it and then have a little consolidation there, and then run up again, probably consolidate again and run up again. So I think it might just sort of hug this trend line here actually.
And one that has been significantly different, has been for some time, is the Dow. It's sitting within that tight range. And I'll just scroll through to it so it's on the screen. Sitting within the tight range, under the highs, and it seems so it's getting a little bit more volatile in this, while still compressing under the highs. The ranges are getting wider on this weekly chart. So that fitting in the same hymn book as the other?
Yeah. No, so that, as we know, Chris, that sort of consolidating, multiple weeks on a sideways manner under the old high is pretty constructive pattern there. So that's the sort of, to be honest, that's the sort of, if we're looking at stocks, relative strength there, that's what we're looking for. And Dow basically closed last week. that was actually closed at a new high there. That's the highest close. So, that's pretty positive. And, I think we've already moved above there in the last session or two. So, so nothing negative at all about that chart at all.
Very nice.
Looks very positive there. That was a stock here we want to be long.
So just the last point here, you've got some numbers here, 49% equals, and then, by the way, so what are these two numbers here that you've got in your chart?
So we know sort of the, from the midterm year low, October, so it's basically, history has sort of shown that's usually a deep low. The average rally for the Dow Jones, I think it might be the last 110 years from memory. Average rally out of the midterm year for the next 13 months, I think it is, something like that, is 49%, which would be, in this case, a move up to 42,000. So it seems a little crazy, since I doubt we're going to get to that level. But yeah, I think we're likely to sort of, I think we're likely to go and retest a high looking at that pattern there. So, we'll see how we're traveling here, and
Well, that's a good update on the indices. If we move into the trading shares that you're looking at this week, we're looking at some movements here where you've highlighted for ALS, the ticker ALQ, marginal new high after a marginal new low, and then had a marginal high, didn't close above it, then a marginal low. Is that sort of telling you that we could be expecting a marginal new high in the next movement?
Yeah, it's just a pretty volatile sort of stock here, really. So, which is kind of, for a lot of the industrial sort of non-growth there, that has been sort of a pattern here for the last couple of years. Even just look at something like the CVA, you can sort of see that's been fairly range bound here for a number of years now. So ALQ there, I think it's pretty high quality sort of company there. That's been sort of similar, really sort of been quite volatile. Had quite a few marginal highs and lows there. Those have been sort of quite really important pivot points for the market there. So I just noticed we sort of come back down, retest the bottom of the level here. Very strong volume is coming off that low. So when we sort of see, like a little false break there and a reversal on strong volume, that's normally pretty positive there. And like the last time we got a false break like this in 22, we went up to a new high there within, I think it was something like, maybe 7 or 8 weeks or something like that. So, so just in that sort of top tier industrial space, just a really consistent pattern here.
And another one on the list you've got is IDP Education with a ticker IEL. So looking at the chart here, we've got a horizontal line going all the way back to 2020, 2021, and then it's low. We've got sort of May 2022, and then we're coming back and edging our way towards that. So what are you looking for on this chart?
Yeah, so IEL is a bit of a, kind of fallen star in some regards. That's obviously the education group there, which obviously has had an issue because we haven't had too many foreign students in Australia here. But that's obviously, changing as we know. And but yeah, the price there, I just noticed technically has come back and retest that low. Had a very exhaustive type behavior there. That that false break there, big sort of volume there, which can exhaust a move down. And then from that level, we've had a pretty nice bounce couple of weeks, pretty good volume, and then we pulled back on sort of on less volume there. And we just sort of had a bit of an up week there last week. So oftentimes we see that the actual XJO has a habit of doing this, having these sort of long tail sort of washouts, have a little bit of a bounce, come back and retest the low, oftentimes putting in that high low and then building from there. So it's a bit of a pattern I see a lot on the XJO. But yeah, it does happen with stocks as well sometimes here. So I just think it looks pretty interesting here. I guess the beauty down here is if we can get sort of, we can position sort of closer to the low there with a stop sort of just under the low there, then there's not, we've got a pretty low risk and potential larger reward here if it can bounce here. So, but the volume profile is it looks pretty positive. I like to look at the daily chart as well, and that exhaustive volume there looks pretty interesting on the weekly. I'm just coming back to retest an old low as we've seen with some of these bigger caps as it's just been a really just a sort of common theme through a lot of the larger stocks here.
So if we go from looking at IDP education to possibly building out a base in a similar pattern that we see from the XJO, if we look at Clinuvel Pharmaceuticals, CUV, could this be building out a bit of a base in this tightening movement here that's, if I was to take a phrase out of your book, would we be saying it's becoming more of a correction in time than a correction in price?
Yeah, look, it's sort of descending wedge there, which obviously can be sort of constructive pattern there. We sort of did have one there, sort of previously, kind of more of a square one there in sort of 2021. Has had a history of sort of consolidating and then coming out there. The interesting thing there is it is a sort of corrective decline, so it's sort of overlapping so far in its nature there, and the volume profile's been really light here, and in particular probably the last 2 or 3 weeks here on the way down here, it's just the volume's really dried up here. So just indicates that although it's sort of been moving down here, the sellers are just really, the kind of the volumes on the sort of on the down here are very, very light here. Just, so we're just probably just not seeing any buyers step in, but really the sellers are sort of, struggling to push us lower here. There's just not a lot of activity there. So that's oftentimes how these sort of, these tightening formations, sort of find a sort of low and turn. There's usually you sort of see that consolidation, you see volume lighten up, and then you're waiting for a trigger here. So really, this is one just to keep an eye on here. Look, it might consolidate a bit further, might stay in this downward consolidation a bit longer here. But as soon as we get a reversal here, see like some sort of pivot day there with some big volume there, it'll be definitely worth following there, because that's sort of, we're seeing there when they break out of these consolidations, they really can get going here. So it's definitely one that I'm watching very closely at the moment.
Well, to go to another part of the market, you're looking at minor or commodities, and you're looking at mineral resources. So looking at the chart here, we're coming back to look at a FB, false break. Always love to see those on your charts. So it's coming down, sort of trawling the bottom, and then dips under, and you say, okay only. So what's the okay only on this setup for min?
So we'd like to sort of see, I'd like to sort of come back and test old highs there. So that's the old high in 22. So that's a really, old highs become sort of new lows. So that's a bit of a really key support zone. Also seen a few sort of tests of that same level, about 3 attempts there, and then the 4th attempt went through but didn't follow through, so it's like a false break as well. So that's sort of something that, I think it's a key level, and a false break there is pretty interesting sign there. So we have seen a bit of a bounce there. We've seen a little bit of volume come in late in the week, which is kind of positive, but the volume so far is just okay. So it's not exceptional volume. So we really sort of want to just probably, I just noticed we've sort of hit the top of this sort of short-term trend line there, overhead line. So we sort of want to, look, we might consolidate here a day or two, but we really want to push through there and push through on some bigger volume there. So sometimes the first week can be lighter there. So I did go back and look at mineral resources there. And the first week or two can be a bit lighter there, but if it's going to get going here, normally it'll have a bit more of an impulsive move, and then and some stronger volumes will sort of come in there. So, but yeah, so just watching this one closely here. I'd like it to break. If it breaks out of that range there and some more volume comes in, then I think it really gets.
And another one in the commodity space, we're looking at uranium this time, deep yellow. Uranium can be known to trend very well and move the whole group at the same time, which leads to a lot of phenomenal charting patterns breaking out together. Why deep yellow? What's caught your eye for deep yellow?
Yeah, two things there. Obviously, it's a sort of larger, big ABC on the weekly. Come back and sort of this whole thing is a very corrective trend, Chris. It's overlapping the sort of up, down, and so it's sort of gone to a sort of margin near low there, but the volume on that last drive has been pretty impressive, some pretty decent volume through there. And now we've just sort of pulled back there. First couple of weeks that pullback were pretty light, and the only sort of volume sort of come in at the low here. If you drill into our daily, so you'll sort of see that volume's coming low here. So looks like a little bit of a pennant flag here. So it looks pretty interesting, actually. So looks like a sort of bullish consolidation. If you get a chance, Chris, or even the viewers there, have a look at Paladin on a monthly chart. So it's sort of had a really, really long-term downtrend for a lot of years, and then sort of building a bit of a base. And now we've sort of had a bit of a move in consolidation. We've sort of got this ABC here. So at the early stages there of what we call a bullish consolidation on the monthly. So if you look at the bigger picture there, it's like, oh, that's a pretty interesting chart there. I know it's sort of, it's had a bit of a move already on the daily, so it's hard to find a safe entry for mine there for that one. But the monthly chart looks really interesting there for Paladin. It's just, you can see the big volume through there, a big sort of consolidation after that downtrend there. My chart looks a little bit more pronounced than that, but yeah, you can see here it's had a nice rally off the low, and it's just been fairly tight consolidation through here. So yeah, just pretty interesting actually, price action there. Because really impulsive move into the high, bit of a sideways consolidation. Normally they sort of break out in favour of the trend here. So it does suggest here that that maybe we could see a bit more upside in that stock here longer term here. So which, if you look for the 70s and stuff there, I mean, energy was one of the top performing complexes there throughout the high inflation period in the 70s. So, it's pretty interesting there, actually. I thought both those stocks look pretty interesting.
Well, if we keep on that energy theme, and you did go into great detail once before, we've turned that into a shorter video just on the 40s and 70s inflation studies that you put together and your leading themes and industries and sectors. In that same energy space, there's Beach Energy. We put that chart into the report this week. Again, we're seeing this sort of wedge pattern here, but notably, we've got outside of the wedge pattern, a strong bar here. So what's happening with this bar, and how would you look at it from a trade?
Yeah, so broken a bit of a swing high in there. Some reasonable volume in there so far. Not awesome volume, but reasonable. Just sort of broken out of the pattern as well. So I noticed Karoon as well has sort of set it high in the range, and it looks quite positive. It's funny looking through a lot of the commodity, different commodities there, Chris. So a lot of the stocks there, they look pretty positive. Even BHP and Rio sort of bounced from a bit of a key level out of that range. So just some good signs there. If you look through that, you look sort of just those sort of stocks there. They've had a nice sort of pullback after this sort of this May low, and now we've sort of put in a high low and move from there. Interesting that May, I think that was 7 or 8 months from the October low, which is exactly the same amount of time. Like if we go back to 02, 03 bear market, that the amount, like the commodities found a low, like our market found a low a few months later, like 7 months later, because commodities were the last, obviously, you get your bonds first, then your stocks and commodities there. So when the US market had bounced out of October 02, we found a low in like March 03 or something. So it was 5 months later or something. And the commodities were about 6 or 7 months later there. So the low on BHP and Rio, or most of our commodities here now, exactly the same amount of time exactly, not a variance, exactly the same amount of time from that O2 low as well. So they've sort of pulled back and kind of low and cover there. So just interesting that those are actually sort of showing a bit of strength there, the commodities there. So I just saw quite a few of the commodities looking pretty positive here across the board. So yeah, so good for commodities, good for our market. Maybe not so good for inflation, but yeah, just definitely a lot of the sort of resource stocks looking quite positive there. Everything like AWC looked interesting as well. So just looked like all the metals were showing some positivity, which is very interesting.
Well, the last one you've got here is same in that commodity space, but a different way of looking at it. Regis Resources, RRL. This seems like it's been climbing a little bit. So look at sort of there's a low here, June, July, then October. We've got something again sort of March, and then where we are now. So is it sort of making its way up already?
Yeah, so it's like a big sort of broadening bottom there. So yeah, look, the two most interesting things on this chart is obviously we've got to set up a bit of a base there, and we've got a few high lows set up, but the volume on that last rally, so going out of that March low, that volume was very, very robust, really strong in there. And then it pulled back on much lighter volume throughout the whole period. And now the last couple of weeks, we've seen the volume tick up again and get pretty aggressive again. So if anyone's ever looked at that Livermore speculative chart, which is like the cylinder, it's like the 1, 2, 3, 4, 5, and then Wyckoff. So it's a very similar looking chart there. Volume profile is very positive as well. Yeah, something like that. So it's like, look, I'm not saying it's going to happen here, but just a very, very attractive chart here. Very positive setup there, quite a bullish sort of, yeah. And look at it again. If you look at those sort of 70s there, Chris, as well, we know that energy was number 1, precious metals was number 2, and then we know value shares was number 3. So, yeah, it's been a little different this time. We've had, some of the growth stocks we've been running because obviously inflation has been coming off. So that's been, that's probably a little different. But I guess if inflation were to maybe come back a little bit, you might see some of this moves there. Just got to be careful with the commodities running here. That can be a precursor to maybe inflation, coming back a little bit or just increasing there. And as we know with equity markets there, we saw throughout the sort of 70s and 40s there where, we didn't need, the head of inflation was high throughout the whole period, but the markets had some rip-roaring rallies in that period just because inflation was cooling off. But then once inflation started to move up again, had some pretty decent pullbacks as well. So, yeah, so I don't know if we're just going to go into a normal cycle here. Inflation's going to just disappear and never come back. I'm not confident about that at all. That would be great to think that. But, history has sort of shown that inflation's pretty sticky. It takes, it does a habit of coming back. So I think central banks sort of know that they can't rush interest rates there, but it could, if we do see a jump in inflation in the future, I think it's going to keep coming off here for a bit longer. But so we get towards the end of the year, inflation sort of has cooled off a bit further, then it starts to tick up there. That might sort of cause some jitters in the market there. That would probably cause the market maybe to sort of cool off or have a bit more of a correction there. I think we're a long way from that. I think at the moment inflation's sort of heading lower here. That's good for equity markets for the short to medium term.
Just trying to remember from your analysis of the 40s and the 70s, going to be a crude summary here, but is it possible that's within a 2% climb or 1.5%, 2% increase again of the inflation? So after it's rallied and then it starts to come off the boil, the markets start rallying as the inflation comes off. But if inflation started to tick up again, say 1.5%, 2%, that could lead to the markets falling, say 20%. Yeah,
unfortunately the case. Yeah, so definitely, as we sort of showed through that sort of 70s period there, the inflation was elevated for 8 years. So I shouldn't laugh about it, but the reality was we had a high inflation for that period there, and there was periods there where it was sort of it'd cool off and then come back up again, cool off again. but there were some big rallies in that market there. So inflation didn't have to disappear. It just had to cool off. And that's what we've seen here so far, is that inflation has cooled off. And that's why we've got this big rally here. So, exactly in line with the 70s. So we've just got to watch here to, watch closely that, to make sure inflation doesn't start to sort of, turn the other way. So if it does turn the other way, that will be a sign to probably tighten up a little bit or lighten off a little bit here. So, I think we're quite a few months away from that. But we did definitely, seeing resources commodities sort of shape up here last week. I thought, that's interesting. If they were to rally here, say, for the next 2 to 3 months and have a pretty good move, that probably is going to add to some inflationary pressures, which will probably kick in, say, 3 to 6 months from now. And then that's sort of towards the end of the year, and that's probably when I'm most concerned. It's probably not now. I'm just concerned probably end of the year as to what, so I think we're sort of going to rally towards the end of the year. But then, just be interesting to see what plays out over the next 3 months here, because those, it's obviously lagging. We know a lot of those inflation measures are lagging. So really, what happens here in the next 3 months will probably will sort of veto what happens, end of the year. So just be interesting to see how that all plays out.
Well, it is good to know the history lessons of the 40s and the 70s and how it can consistently repeat itself. And more importantly, give us a bit of a playbook and some insights as to how to set the portfolios up and what trades to look for. And to that point, we do say thank you very much for all the research that you're continuously bringing and the insights you're sharing like you have today. Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned all those things like the 40s and 70s inflation, and also the Friday where he goes through the 30-30 watch list. We're looking at top 30 momentum stocks in the Launchpad, and he breaks down the charts looking at the strongest companies on the ASX. Those two playlists are on the right-hand side, and on the left is Gary's Twitter handle if you want to follow him there.